Thank you.
Hi guys. Thank you all for coming today. I know the weather's not great and the tubes aren't great, so well done for getting here. For any of your friends who aren't here, this event will be recorded and we will let them have a look. So the topic for today's event, obviously, as you know, is the future of Islamic finance. We'd like to, before we start, thank our sponsors, without whom this would not have been possible. And I will now pass on to our speakers, who are Professor Maida, sitting in there. Then we have Mr. Father Alam, and we have Mr. Imam Ghazi. And I will pass it on to them from here on. Thank you.
Assalamu alaikum and hello to everybody. Thank you for coming on this miserable weather. I don't actually live in London anymore, but I worked most of my working life in London. And the travel in, and then there's a tube strike, and the weather reminded me all the reasons why I don't like living in London anymore. But it's nice to be here. You know, thank you for the organisers for arranging the event. And it's a pleasure for me to be invited and to have the chance to speak to you. I think before we start, we'll just have a quick introduction from the speakers so you have a bit of an idea of who we are and our backgrounds. For myself, I'm an investment banker. I'll be working in banking, specialising in Islamic banking for about 10 to 12 years. Working for large global investment banks, not Islamic banks, but Islamic banks have been my clients that I've been working for. And the last couple of years, I decided to set up a consultancy firm which provides services and investment advice to my clients, which are Islamic banks. And I work with clients in Europe and in the Middle East and in Southeast Asia, which is interesting for me. And the assets that I tend to look at are global as well. So I don't just look at UK assets, I look at global assets. So the main thing that I'm trying to do, which is of some relevance here, is that the things I'm trying to do, I have a very specific view on Islamic finance and the importance of it and how I think things should be done. And the things I'm trying to do are to try to help develop the industry in ways that I see as positive. And that's not always reflected in the things that I see in the industry. So that would be largely the angle that I'm coming from today. I'll just pass on to Brother Dumayo for a quick introduction as well.
Right, good evening. I actually like living in London. I was, when I was at Loughborough, my background is academics. I was at Loughborough University for about 7-8 years, where I co-founded the first ever MSc in Islamic Economics, Banking and Finance, offered by any university in the Western Hemisphere. I still am involved in academia with a few academic positions here in UK and in Malaysia and Pakistan as well. I moved into Islamic banking industry at the end of 2004 when Deutsche Bank decided to start its Islamic finance operations. They set up a company called Dar al-Istismar, which was a joint venture between Deutsche, a center for Islamic studies at Oxford University, and Saudi bin Laden Group. I became the first CEO of that company, stayed with Deutsche for about 3.5 years before moving into another company which was owned by some stakeholders from Brunei. In 2011, we decided to have our own company called Advis Consulting, which is into Islamic financial advisory business. So we advise a number of clients from different backgrounds on matters related with the structuring of Islamic products. We have, for example, a partnership with NASDAQ. For the last 3.5-4 years, we have been a part of a team which developed NASDAQ 100, NASDAQ 100 in a Sharia way. So we call it Advis NASDAQ 100 Sharia, and some other indices as well. We work with quite a few fund managers as well, which offer Islamic fund-related products, and Islamic banks and financial institutions in the Middle East as well as in Malaysia, Singapore, and other countries in the Far East. My views on Islamic banking and finance are consistent with the other members of the panel. And in my introductory remarks, which I swear that will continue, I would like to give a kind of overview of Islamic banking and finance industry. Among other things, we are involved in estimating the size of global Islamic financial services industry. My company, AdBiz Consulting, we publish an annual report called Global Islamic Finance Report. The 5th edition of this is coming in April, which we are going to launch in Washington, D.C. So when we were working on the estimation of the size of the industry for the year 2013, our estimates for the year 2013 were 1.8 trillion US dollars at the end of 2013. So this is the December figure. Exactly 1.813 trillion US dollars. So that is the size of global Islamic financial services industry. In terms of concentration of these assets, primarily in the GCC region. But one country normally we forget, Iran. Iran contributes about 46% of the global Islamic financial assets. And other important countries, we will look into them, but primarily the countries in the GCC, Malaysia, and some other countries are becoming important, like Turkey, Indonesia. Egypt hopefully would play a significant role in the years to come as well. In last 2-3 years, one instrument which has got a lot of renewed importance is sukuk, which is, loosely speaking, an Islamic bond. In the context of UK, last year at the end of October, Prime Minister David Cameron, he introduced that UK would issue a sovereign sukuk of about 200 million GBP. And I was on a conference call today with a party in Luxembourg. Luxembourg authorities are looking into the possibility of issuing a sukuk of about 300 million, more than 300 million euro this year as well. 2013 total issuance of sukuk worldwide was about 116 billion US dollars, which was less than the last year, i.e. 2012, when the total Islamic bonds / sukuk issued were about 146 billion dollars, which was a record. Many analysts believe that this trend of sukuk issuance would continue in 2014. This will become an even more important instrument in Islamic banking and finance. My own view is that in the next 3 to 4 years, the contribution of sukuk in the global Islamic financial assets would be about 25%, which is quite remarkable. If 1/4 of the industry is concentrated in this instrument, one conclusion is that this is a very popular instrument. From risk for the industry viewpoint, this might not be seen as something very healthy for the industry. Other areas which have not been so prominent are takaful or Islamic insurance. There was some kind of expectation in the industry that takaful would become very significant in the context of Islamic banking and finance. However, in terms of its proportion, it's still very small. It's even less than 0.5% of the total Islamic financial services industry. But in future, one should hope that the size of takaful / Islamic insurance and its relevance as a proportion of the total size of Islamic industry would grow and become more significant. Of course, you will have a number of questions, and I'll be very happy to answer some of the specific questions if I can answer. Thank you.
I think I'll stand up if that's okay. It's difficult sitting down and talking. Bismillahirrahmanirrahim, begin in the name of Allah, most beneficial, most merciful. I am genuinely delighted to be here. I normally, at these things, you have to start off by saying thank you to organisers, delighted to be here, thank you for being invited, etc. I think on this occasion, I do genuinely mean it. It's great to be here at an academic institution. Most of the speaking I do is normally to practitioners or people interested in the Islamic finance industry. And when I'm talking, people tend to be listening thinking, oh, how can I make some money out of this opportunity? What's in it for us? But hopefully the audience here is a bit more interested from an academic perspective at the true sort of value proposition of Islamic finance, which hopefully we can explore during today's session. So to give you a brief background of myself, my name's Imam Kazi. I'm a partner at a law firm called Foot Hansley, based out in Bristol. My background is as a real estate lawyer. I've been doing that for many years. And in about 2004, 2005, I saw the opportunity to develop an Islamic finance practice within the law firm I was working at that point. And that came about when the first Islamic mortgages were being offered in the UK through Appiah United Bank, and I used it when I purchased my first flat, and then I thought, oh, well, maybe this is something that is actually relevant to my working life as well, because I've always had an academic interest in Sharia, but never really related it to my working life. And then I found the ability to bring together what I do in my day job with my sort of personal interest in Sharia and Islamic economics. So I sort of dedicated myself over a number of years to developing an Islamic finance practice by understanding what the opportunity is in the UK. So my perspective really today is around the sort of grassroots UK practitioner's perspective of what Islamic finance means. And I think that the relevance of the UK should not be underestimated. I mean, as a global financial centre, London is preeminent. And the fact that, as has been mentioned, David Cameron has singing the praises of Islamic finance and genuinely wants London to be one of the global centres for Islamic finance is no small thing. And that is something that has been developed over the last decade, starting really with introduction in the Finance Act, I think it was in 2004, to level the playing field for Islamic finance. So what I mean by that is because the way Islamic finance works, I think we'll get onto that probably later on in the session, obviously you can't charge interest. So we use other structures which typically involve multiple trading of assets, and they will have adverse tax consequences. So in order to have a level playing field for the Muslim consumer or Muslim investors or Islamic banks, legislation was needed to remove some of the tax barriers. And the government were fantastic really in sort of listening to the needs of the people and introducing those changes. And that's every year, I think, since 2004, there will be a section in the Finance Act, in the budget, in the small print, where they're looking at the issues relating to the Islamic finance industry and how they can further promote and make Islamic finance a more attractive proposition in the UK. I guess hopefully during the course of this session we can look into what Islamic finance is, and then I guess look at some of the challenges for the future. One glaring challenge, I think, to everybody, not just to Islamic finance, is the sort of growing inequality in wealth in the world. I mean, we've seen right through the recession, you would have thought the richest people would have been worse, but they haven't at all. And all that's happened really is that the concentration of wealth is going in one direction. And is there anything that Islamic finance can do to address that, or is it just jumping on the bandwagon and making the rich richer as well? So it's something we can talk about during the session. Thank you.
Thank you very much for that. Similar to Brother Imam, my experience in terms of speaking and giving workshops and such is normally to people who are already in the industry, bankers and lawyers and such. So it's very interesting, and I'm very pleased to have the opportunity to speak to students and the audience from an academic background. So I think also on that aspect, I've been advised by the organizer that it would be useful just to spend a short amount of time just to let the audience know what Islamic finance is. I think initially it would, if you're okay with it, maybe provide a broad overview of what Islamic finance is.
Yeah, I'll happy to do that. So Islamic finance, I guess, is a part of the sort of Islamic economic system. So under the Islamic economic system is based on Sharia Islamic law. Islamic law is a system of rules which is not too dissimilar, in fact, from English law, despite what you might hear. So the Islamic legal system is based on, has various rules about how you conduct yourself in a business context, in a personal context, and a social context. So the relevance to what we're talking about today, I guess, is the rules within Sharia which relate to how you transact between yourselves in a business context. And one of the key foundational rules to how you can trade between yourselves is to eliminate the idea of riba, or usury, or interest. So this is because what you're doing is you're allowing money to generate money. So you're allowing those with money to accumulate more wealth just because of the fact they're holding money and not because they're actually doing anything productive. So there's a prohibition on paying or charging interest. And that really is the crux of the need for an alternative system, hence Islamic finance. There are other sort of quite fundamental rules that differ between conventional finance and Islamic finance. So you have the prohibition of interest. You also have concepts of uncertainty, qadar, in contract. So under English law, there is the doctrine of certainty within the contract. So you can't, in order to enter into a contract, there has to be sufficient certainty within that contract for it to be valid. The same applies in Sharia, but it's a slightly higher bar. The bar is set slightly higher, and that the degree of certainty needs to be a bit greater than as is required under English law contracts. So that comes down to, for example, under certain types of trade contracts, you have to fix a price and fix the payment dates. So this reduces the flexibility in certain circumstances. And then there's prohibitions on undue speculation or gambling, which obviously comes into what we do as well. So, but the crux of it really is around the prohibition on paying or paying or receiving interest. So therefore, how does an Islamic bank make money? How does it survive? So what happens typically is that an Islamic bank who wants to help somebody to, for example, buy an asset, can't just lend them money to buy the asset and charge interest. So what can they do which satisfies the needs of the individual who needs the financing and generates a profit for the bank in order for it to survive? And one of the basic concepts, for example, is murabaha, or cost plus financing. And what that involves, so say you wanted to buy an asset for £100, but you didn't have the cash. The bank, I say on the bank, I might go and buy that asset for you for £100, and then sell it to you at an agreed markup price of, say, £110. And then we could agree that that £110 can be on a deferred payment basis, so that you would pay me maybe by instalments or by a fixed sum at a future date. Now, the essence of a murabaha contract is that there's full disclosure of the purchase price, the markup, and the sell price, and everything's fixed within it. So it's sometimes known as a trust sale, because you're trusting the person you're buying it from to tell you what the price is at which they bought it. And that's a very useful instrument, because that can be adapted in many ways to many situations. And so the difference there between a loan and a murabaha transaction is that the bank is involved in a trade in an asset and is therefore making a profit out of trading an asset rather than just lending money. And we can have a debate about the semantics of that if you like. Another method that's commonly used, by way of example, we just mentioned one more, I don't want to take up the whole session, is leasing, or ijara. So ijara is the Islamic term for leasing. So say again you wanted to buy an asset, the bank would again go and buy that asset for you, because they've got the capital to buy it, you haven't got it, and they will grant you a lease, so that you can use that asset through an internal lease. And then typically there would be an option for you to acquire the property, the assets from the bank, at the end of the term of the lease. So, and that is actually a slightly more flexible financing mechanism, because you could have rent reviews during the term of the lease, so you could vary the lease, the rent payable lease every month, every quarter, every half year or year. And there's generally sort of flexible repayment options. So if you wanted to acquire the asset earlier than a prescribed term of the lease, it's generally right for you to do so. So the Murabaha is generally quite fixed. The Jara is flexible, is more flexible. So that hopefully just gives you a flavour of what Islamic finance is about and how it kind of works in practice. And you know, my job as a lawyer is to develop products and documentation which is enforceable and relevant and practical in the UK context, and is also drafted in a way so as to be Sharia compliant. Okay, as an introduction.
Yeah. Thank you very much. Brother Umayya, would you like to add something?
Right. In addition to the technicalities which Imam Qazi has shared, I would like to make 3 points. And these are general points. First thing is that Islamic banking and finance is a business phenomenon. A lot of people, they think that this is a religious phenomenon. There is a huge debate in academia. Some academicians, they wrongly believe that Islamic banking and finance is an offshoot of world Islamist movement, which is not the case. This is purely a business phenomenon which has attracted players from different parts of the world and from different faith groups. Today we find Muslims involved in Islamic banking and finance, and so are non-Muslims as well. There are Catholics, there are Jews, there are Hindus. So it's not just a faith-specific phenomenon, rather it's for everyone who would like to do banking and finance in a specific way. So this is one thing I think it should be clarified, that this is not something only for Muslims. This is for anyone and everyone. Second thing, contrary to the views taken by some of the academicians, Islamic banking and finance is being practiced by modern and moderate Muslims, who are in majority anyway. So we find, when we look at the families, for example, which have contributed to the development of Islamic banking and finance, they are not known for their strong Islamic inclinations. They just happen to be normal, ordinary, not only normal Muslims. Because the example I'm going to give is not an ordinary Muslim. Sheikh Muhammad, for example, Sheikh Muhammad, the ruler of Dubai, he represents a common Muslim man from the faith and practice viewpoint. He's just like anyone else. He's not a very conservative Muslim, but rather anyone you can pick up from the street. His views and his lifestyle is like this one. But Sheikh Muhammad, he has played a tremendously important role in the development of Islamic banking and finance. So all the Islamic banks like Dubai Islamic Bank, Noor Bank, these are Dubai-based banks. There is Sheikh Muhammad's family's shareholding, and of course the shareholding of the government of Dubai. Similarly, in other parts of the world, when we look at the shareholdings of Islamic banks, they happen to be just Muslim business families. And in some cases, there are non-Muslim business families as well. Until recently, I used to sit on the Sharia board of one Chinese Islamic bank. Hong Leong Islamic Bank was set up by Hong Leong Bank in Malaysia. And this bank is owned by 98.93% owned by the Chinese. So again, this substantiates my first view that this is a business phenomenon. Anyone can do Islamic banking and finance. And the third point I would like to highlight is that Islamic banking and finance, the way it has evolved, it is part of Western capitalism. It's not something outside it or something which should be seen as a threat to Western capitalism. This is not the case. This is where we find the likes of HSBC, Standard Chartered, Bank of America, Merrill Lynch, you name any big Western capitalist financial institution, and they are doing business in Islamic banking and finance as well. Although some people, okay, even including myself, I would like to see Islamic banking and finance as an alternative way of doing banking and alternative to the capitalist way of doing banking and finance. But so far, the way the practice has evolved, it is part of the Western capitalism, okay, not something outside it. This is why there is a lot of harmony and consistency between what Islamic bankers are doing and what has been done for centuries or for decades in the Western banking and finance tradition.
Thank you very much. I would just like to give my overview on the good introduction provided by the brothers. For myself, when I was working in investment banking, and before I came into Islamic finance, I was actually working in areas that are highly not allowed in Islamic finance. I used to work a lot with interest and the money markets. I used to work on the trading floor, and I used to work in exotic derivatives, with the whole essence of which is speculation of the sort, it's risk transfer. So the majority of the dealings I had before I came to Islamic banking were in areas that are highly forbidden by Islamic banking. And one of the reasons that I found it very fascinating was the fact that, in my view, the principles set forward by our religion in terms of what you're allowed to do and not allowed to do, for example, related to interest and speculation and derivatives and gambling. In my view, those principles were a very clear contradiction to the modern banking system and the modern capitalist system. And I think it's very interesting what Brother Humayun was saying, and he's right, that Islamic banking as practiced today is in many ways a pretty harmonious subset of the capitalist markets and the capitalist system. And I think that can be seen as a positive thing. However, in my view, I think it's a shame, because by recognizing the fact that if we accept that we have to be part of the global conventional or the capitalist markets, I think the only way we can continue to be part of a subset of that is by compromising many of the principles that should set Islamic banking apart. So, for example, the brother talked about the prohibition of interest. In my experience working on the banking side, and there's a saying in banking that cash is king, and the flow of cash between banks, which is the engine to provide the flow of cash between individuals and businesses and economies, and also governments. It's all driven by debt and interest, whether it's as simple as a single overnight loan for liquidity purposes, ranging through to the governments issuing perpetual bonds, or 20-year bonds or 1,000-year bonds. The minutiae of what governs our lives is driven by flows of cash at interest, whether we understand it or not. And one of the ways that we've seen that link in the last few years is how, when the banking system crashed, due to the involvement of the unsustainable levels of debt and speculation, it wasn't just debt. If you remember companies like AIG and credit derivatives, the uncertainty around those, that nobody really understood what was going on. And when things went bad, the losses suffered by huge investment houses, it made them bankrupt and people lost jobs. And for people who live here, you will remember the amount of taxpayers' money that was used to bail out banks. And I think that there's a general feeling, and I think it's global, I don't think it's just in the UK, that there's a sense that the capitalist system, it works in many ways, but it fails in many ways as well. And for me, one of the drivers, and I think for a lot of Muslims who have an expressed desire in Islamic finance, one of the things that drives me is the fact that the principles are very strong and they're very fair in Islamic finance. And they are in direct contradiction to many of the principles that we see in capitalism. And I think that's a very specific challenge that we face in Islamic banking. And up to now, in my experience in working in Islamic banking, the general approach from the industry has been not to rock the boat. It has been that it is difficult to face head-on the driving forces in modern banking and economics. It's very difficult to, so for example, if you have an Islamic bank in the Middle East, the Islamic banking in the Middle East is just seen as normal. There's a lot of Islamic banks there. And if you explain to them, well, they will understand, but if you talk about the issue of interest, for example, and debt, that is not allowed, the very first question they will have is, well, we cannot survive if we do not do certain transactions that are linked to debt. So for example, I remember a couple of years ago, I looked at a typical balance sheet of an Islamic investment bank, and it was a large one, it's an international one. And I saw things which didn't surprise me at all, knowing how banks run. So for example, their assets, over 95% of their assets were debt-related, and 95% of the liabilities were debt-related. And this, in my experience, that's typical of banking. But it confirmed to me, having been on the transactional side, it confirmed to me that the reality of Islamic banking, it is not that much different in terms of overall outcomes to conventional banking. And that's a result of many things. I don't think it's the fact that Islamic bankers and Muslims don't really want to do Islamic banking. I think it's a result of the fact that it's just so difficult, as Brother Humayun was referring to try to develop a system that in essence is very much in contradiction to the overall system. Linked to that, I think one of the key drivers between the various prohibitions we spoke about, interest, and speculation and uncertainty in contracts, I think the overall driver for those is justice and fairness. Because my understanding of the reasons for the prohibition of interest, for example, is that it provides one party with an unfair stance compared to the other party, especially if one party cannot pay. And that's life. I mean, for example, if you don't pay your credit card bills or you don't pay your mortgage, you'll get a letter in the post pretty quickly. You know, and if you're struggling, the provider of finance is not under any obligation to help you. I mean, they might try to, but they're not. So one of the reasons that interest is banned is to try to provide parity and fairness between the parties. And the same for uncertainty in contracts. If there's an execution of a contract and it's not clear exactly who's getting what and what's being paid for and the time of delivery and what you're getting, that leaves the scope for one party being unfair to the other party, whether it's intentional or not. So I think the drive of many of the requirements of Islamic banking are driven by social justice. And just a final point on that is, I mean, being a UK citizen, so it's not long ago where we had to use taxpayers' money to bail out banks, and I think the prevalent view amongst the average person who's not a banker, who doesn't work in the city, is that in general banks always do well. In good times and bad times they make a lot of money, bankers get lots of bonuses. And when problems occurred in the banking system and banks needed help, they came clapping down to the government for taxpayers' money to help them. And I think there's a general view that banks are doing something that people don't understand. That when things go wrong, they're taking taxpayers' money, which is our money. And I think there's an issue with how people view capitalism and banking, that it doesn't always sit hand in hand with social justice and fairness. And these social justice and fairness is the driver for Islamic banking. So for me, it's this direct contradiction between the two sets of values that I think is the value of Islamic banking. But in reality, it's very difficult to put the principles into practice, to develop something on the ground that shows the difference in principles. Which is why if you look at many Islamic banks, and even at a country level, which do operate Islamic finance on a reasonable scale, you will not see at an overall level much that is different compared to a capitalist bank and a capitalist economy. We've discussed a bit about the principles of Islamic banking. I think soon we'd like to talk about Islamic banking in the UK, but just before we do, I'd like to give the brothers here a chance to talk about Islamic banking globally. For example, where is it practiced most? Where has it taken up, in terms of speed, where has it accumulated interest the most? What kind of countries have been doing it for a while? What kind of countries are looking at it more recently? And why is it relevant for the audience here, for example, just to be aware of Islamic banking, that it's not just a UK phenomenon or not just a Saudi Arabia phenomenon.
So should I? Right. Can someone put that slide which I think it's interesting to look at the future of Islamic banking and finance to see where Islamic banking and finance, this one, where Islamic banking and finance is being practiced. You know, we estimate as part of our research for Global Islamic Finance Report 2014 that by the year 2020 there will be at least 6 countries in the world where the share of Islamic banking and finance would be at least 50%. And these 6 countries exclude the 2 countries which claim to have their system already fully in compliance with the Sharia, i.e. Iran and Sudan. So these 2 are excluded. The next slide would give us the countries which would be important in future by 2020. Brunei Darussalam, this is one country where the share of Islamic banking and finance as of today is 46%. So in the total banking and finance sector in Brunei, Islamic banking and finance is about 46%. So our estimate is that by 2020, the share of Islamic banking and finance in the country would be more than 50%. Then we have Saudi Arabia. In Saudi Arabia, the share of Islamic banking and43-44%. Kuwait 35%, UAE about 29%, Qatar, Malaysia. So these are the 6 countries where Islamic banking and finance at present is very, very significant, and by 2020 these countries would have Islamic banking and finance its share at least equal to the conventional one. This is something no one would have claimed about 10 years back, because the percentage and proportion of Islamic banking and finance, the total banking and finance sector in all the countries of the world was very, very small. Outside these countries, still it remains very small. I can give you example of Indonesia, only about 5%. And Indonesia is the country with the largest Muslim population in the world. Right? And it's a very big Muslim country, and Islamic banking and finance is only about 5%. The second largest Islamic country population-wise, Pakistan. Right? Their Islamic banking and finance is only about Islamic banking when we refer to deposits, so it's only 10%. And in other countries, it's even smaller. In this list, we don't find any Western country. Right? And the next list which I'm going to show, there we will see that there are some Western countries as well. This Islamic Finance Country Index is an index we have been publishing for the last 3 years. Right? And in 2013's ranking, UK and USA, they featured in the first 15 countries. Iran remains number 1, Malaysia number 2, Saudi 3, UAE number 4, and so on. UK is number 12. Okay. And USA has been kicked out. Okay. It's there, but you can't see it. It's number 15. So in the top 15 countries in terms of the importance of Islamic banking and finance in those countries, there are only 2 Western countries, UK and US. This basically means what? This means that Islamic banking and finance is primarily an OIC, Organization of Islamic Cooperation. It's an OIC phenomenon. OIC has got about 56 Muslim countries. Now those of us who, because now we are British citizens, we would like to highlight the role of UK. Right? Those of us, and Brother Imam Qazi, okay, he would mention. Okay, but my own view is that although UK Luxembourg, Ireland, and on the other side of the pond, USA, okay, they can play an important role in Islamic banking and finance, but their role would be that of cheerleader. Just to excite you, when you had this cricket match, a batsman hits a shot, it's a boundary, and these cheer girls, okay, they are there. Okay. In my view, the Western countries, in the context of Islamic banking and finance, they can at best play the role of a cheerleader. The real development in Islamic banking and finance, okay, in terms of 4s and 6s, that would come from the OIC countries, because the demand is there. Here in UK, we have about 2.25 million Muslims. Right? And in other European countries, again, in terms of percentage, Muslims are insignificant, very small minorities. The real demand and growth, okay, that would be in the countries, okay, and that would be the next list. In the countries where Muslim population is huge. Indonesia at present, Islamic banking sector is about 5%, but given that it's over 200 million country, 230 million people, that is the country which will drive Islamic banking and finance. Pakistan, about 200 million, 195 million population. That is the market people should be looking at. Similarly, Turkey, okay, and Egypt, and I think they have been slightly misplaced. Bangladesh, okay, these are the countries with huge population. And in my opinion, these economies would become very, very important players in the global Islamic financial services industry. At present, we have the likes of Malaysia, the likes of Saudi Arabia, to some extent UAE, okay, and of course Qatar. Okay, they are playing a lead role in Islamic banking and finance, but in future this is going to change. The demand and the growth in Islamic banking and finance would be in the countries where there is huge demand. That demand is there where there are more people in number.
I have just one question on that point. So, for example, we see the countries where you see the largest potential growth coming in the next few years up to 2020. To what extent will this growth, or can it occur just within the country? And to what extent will the country need support from, for example, non-Muslim countries? So, and linked to that, because my experience has been working with global conventional banks in Muslim countries, and I see them very strongly linked and supporting regional banks and the governments. So what proportion or aspect of the growth do you think needs the involvement of non-Muslim participants?
Actually, the role of institutions owned by non-Muslims, or the role of non-Muslims in general in Islamic banking and finance, would remain very significant. And there is a social and political reason for that. It was in the early 90s when I used to go to the GCC. A lot of Arab Muslim bankers, they would ridicule me. So Islamic banking, it's a sham, it's a fraud. That was their view. Oh, it's banking in another name. That was their view. When the likes of HSBC, Citi, and other banks, they got involved, especially when HSBC committed itself to do Islamic banking. A lot of banks in the Muslim world, they said, oh, if HSBC is doing it, it must be credible banking. Okay. And they started. Then look at the likes of National Bank of Abu Dhabi, okay. Even Arab Banking Corporation. It has a slightly more history, but the real significance of Islamic banking started only when they saw that these Western institutions, they are doing Islamic banking. And I can tell you, when in October David Cameron said that, oh, I would like to, or we would like to develop London as a center of excellence for Islamic banking, a lot of Muslim leaders, political leaders, prime ministers and presidents, okay, who used to look away when you would mention or suggest Islamic banking. But when David Cameron said, they started taking the things very seriously. I'm a close observer of what is happening in Pakistan. Okay. After the Prime Minister of Pakistan attended World Islamic Economic Forum here in October in London, where he heard for the first time David Cameron, a non-Muslim, advocating Islamic banking and finance. The guy went back home, Islamabad, and his finance minister, they constituted a committee for promotion of Islamic banking, something which Bank of England did in the early 90s. So I would say that the role of non-Muslims is very, very crucial for the development of Islamic banking and finance. I'm not saying that, the non-Islamic financial institutions or non-Muslims, they have no role to play. I'm just talking about what is the future in terms of market dynamism. Even, when I say that the real future of Islamic banking and financing is in the OIC countries, it's very likely that the likes of HSBC, Barclays, Standard Chartered, and so on, they become major players in the Muslim world, offering Islamic financial services in those countries, which has already been the case in case of Malaysia, for example. There, although HSBC has decided to come out of global Islamic banking and finance retail level in other countries, but in Malaysia still, it maintains a retail bank, HSBC Amana, Standard Chartered Sadiq, which is another Islamic bank owned by the British shareholders. So I would say that the relevance of non-Muslims to Islamic banking and finance is going to be there for a very long time, and we should actually encourage this kind of relevance and engagement of other faiths or non-faith groups in Islamic banking and finance. On an academia, in academia, there is again a consistent kind of tendency. Two guys from United Kingdom, Rodney Wilson, a professor of economics at Durham University, and John Presley, a professor of economics at Loughborough University. Non-Muslims, but they have done a tremendously good job for the promotion of Islamic banking and finance as an academic discipline. If I would say that if I take these two guys and 100 Muslim academicians, they have not done the kind of service these two professors from UK have given to Islamic banking and finance in academia. So don't take me wrong, when I say, the future lies in that part of the world, it's primarily because the market is there. Here, the market is very small, but the relevance would remain there. Look at the likes of Luxembourg. Luxembourg, it's a global financial center for asset management, now increasingly becoming a center for wealth management as well. A number of Islamic financial institutions, they are going there. Similarly, Dublin, Ireland. The relevance of these financial centers is there, and it's going to remain there for a very long time, even if we have financial centers develop in the Muslim world. The likes of Kuala Lumpur, the likes of Dubai, they are going to become important financial centers, but I think very little could be taken away from the already well-established financial centers in the world. Most of them happen to be in the West.
Thank you very much for that. I'd just like to add a couple of comments. Having worked I've always worked for non-Islamic banks. I've worked with global conventional banks providing services to Islamic banks and Islamic industry. And from what I've seen, I think it's certainly true that a lot of the acceleration in growth and a lot of the global visibility has certainly been enabled and provided by the input and support of global conventional banks. And I think one of the results of that we see are places like Luxembourg and Ireland and the UK and Singapore and to some extent Tokyo as well, who look at Islamic finance as enough of a positive phenomenon that they want to be involved. in my experience, the reason that it's seen as a positive phenomenon, largely it's a commercial choice. You know, it's a factor of, it's cost-benefit analysis. So for example, if you, the Islamic teams that I've worked in conventional banks, they would look at Islamic finance industry as a potential new area of business, and you'd analyze it like any other. What resources do we need to put into it to provide services to that industry? What return do we get in terms of commercial return and also non-commercial returns in terms of support of clients and supporting the governments and the central banks in those countries. And to the extent that that return is positive, global banks will continue to support Islamic banking within those countries. Now, in the list that was on the board, it's not just there at the moment, but if you take away countries that are wealthy countries, if you take away Saudi Arabia, Kuwait, UAE, Bahrain, Brunei, and you're left with countries like Iran, Bangladesh, Pakistan, Indonesia, I think you're left with a very different proposition which will be viewed by non-Muslims in terms of assessing the extent to which they want to get involved with Islamic banking. And it's not just commercial. Obviously, the countries with money, the Muslim countries, have a lot of money. And on that list that was on the board, the countries without money, a number of them, have very tough political scenarios on the ground. So the flip side of saying that non-Muslim institutions are willing to get involved in Islamic banking, my view is that it's purely a commercial choice for them, and that's not a bad thing. The flip side is that I think we have a certain window of opportunity in Islamic banking, whilst as a community, global community, whilst we have wealth. So for example, if you put a proposition to HSBC or JP Morgan where I work that, that there's a way into the banking sector in Saudi Arabia who are very protective of their banks, that in order to get into it, you need to provide Islamic banking services to the banks there. You need to provide $5 billion of credit to the institutions there. The conventional banks will do it because they see the benefit exceeding the cost that they put in. If you put the same question to the global banks with regards to Pakistan, for example, or Bangladesh, or even Indonesia to some extent, the answer will be quite different. And I think, whereas it's positive that we're seeing a number of non-Islamic countries and non-Islamic institutions being involved in the industry, I think for those of us who are in the industry, we shouldn't lose sight of the reason that they're there. And the reason that they're there is mainly commercial reasons. I don't think it's necessarily a validation of the principles behind Islamic banking. And I think that's something, a standpoint that I've seen quite a lot amongst Islamic bankers and Muslims, that if there's a fund or a sukuk or a bond that London wants to list, for example, then surely we're doing something right. Surely we're going in the right direction, that everybody wants to be a part of it. But I think we have to think a bit more about the involvement of non-Muslims. And I think it's very positive non-Muslims are involved. It's, I think, the ultimate litmus test for Islamic banking should be how it's viewed by non-Muslims. And in theory, and this is my view, that Islamic banking principles should present such a clear view of a system that should be superior to what man has created. And if somebody looks at that system, whether they're Muslim or not, they have no religious drive making them subjective if they're objective. And they look at a system that has no interest, that has social justice, that has no speculation, and they look at the application of those principles, they should come to the view that that system is superior to capitalism. For me, that's the litmus test for our Islamic finance. And I think we're quite far away from there because the application of the principles, it's difficult to put into practice the high principles that we have and in practice. And I think linked to the points that I'm making is that we have a window because there's wealth in Muslim countries. In a number of Muslim countries there's wealth which attracts the attention of global institutions. I don't know how long that wealth will last for, and also the timing connected to, we're still coming off the back of we're still in the recession, the global recession. Linked, and we've seen banks fall, we've seen governments have real problems, we've seen countries go bankrupt, and we've seen an environment where I think people in general are looking for alternatives. And we have a very good window now, and probably for a few years, where we can present Islamic banking and say it is a viable alternative. But the problem we have is the way it's practiced, because of various factors, we're not taking advantage of the principles. So when there is an analysis of Islamic banking on the ground, and it's an objective analysis, it's going to be quite critical. And in due course, once the global system finds its feet again, I think there'll be slightly less interest in, how are other countries doing things, what are interest-free solutions, because capitalism will be seen to start working again. I think now, if Brother Imam, if you want to talk to discuss the situation of Islamic finance in the UK.
Okay, yeah, I think probably just initially just a comment on the global situation. With countries, the large Muslim population countries such as Egypt, Turkey, Indonesia, Pakistan, Bangladesh, and some African countries. I think perhaps if we redefine Islamic finance to be transacting in a way which is Sharia compliance, then perhaps quite a larger section really of those countries and individuals within those countries are practicing Islamic finance, but they're just not banked. So they're kind of the sort of unspoken majority, if you like. So they're the people who don't have a bank account with a conventional bank or an Islamic bank. So to judge sort of the Islamic finance infiltration by the percentage of deposits in Islamic bank versus the conventional banks, perhaps slightly muddies the picture slightly, because there will be a vast number of people who just aren't in the banking system, either because for economic reasons or because for religious reasons. So they are transacting between themselves, in their own communities, in informal ways, in a way which is Sharia compliant. I think so. But that's a good or bad thing. That's just kind of a fact of what's happening. So returning to the UK and sort of the state of Islamic finance in the UK, I think at the moment we've got about 5 wholly Sharia compliant banks registered and authorised in the United Kingdom.
6.
6, yeah, we've 6, I should say already. And then there's a number of other banks who provide Islamic financial services as alongside conventional services. There's a whole range of professionals involved in Islamic finance, with law firms, accountants, and various consultants and advisors. London is seen as, or the London Stock Exchange is seen as a good place to list Islamic products. The market for Islamic finance in the UK, I guess, has different faces to it. So, on the one hand, there is the local Muslim population who have a need for Sharia compliant banking services. So there is a market to service that. So there are their current accounts, their savings accounts, there's mortgage products. There's now ISAs, SIPs, all different types of pension products, etc. So there is a whole range of services out there for the UK Muslim consumer. There's also quite an active market, which is probably where I spend most of my time, which is to enable investment into the UK from overseas. So a number of Middle Eastern investors want to invest in the UK in a Sharia compliant way. So that's a big part of what Islamic finance is in the UK. And then I suppose another area, which is where you have Islamic banks providing Islamic financial services to the non-Muslim UK public and businesses, which is actually quite a growth area. So a number of the banks provide financial solutions which, for whatever reason, are being taken up by regular UK businesses and investors, just because they're able to fill a gap which the current other banks are not able to provide. So I think that's sort of quite an exciting part of Islamic finance, the fact that it's kind of bridging the gap really between the East and the West, and between the Muslims and the non-Muslims, and bringing us closer together. So I think that's probably what I'll say about where we are in the UK on Islamic finance.
There are a couple more topics that we can speak about, but I think it would be interesting if anybody has any questions. We could take some questions from the audience, please.
Thank you, gentlemen, for your intervention. My name is Michael, and my question is regarding Indonesia, Pakistan, and Bangladesh. How would you assess the level of maturity of the banking system compared to the development of Islamic banking in those same countries?
The development of banking and finance with respect to Islamic banking and finance in this country, maturity.
Yes, you said that Islamic banking wasn't that big in Indonesia. I would say, well, maybe it's because the banking system as a whole is not that developed yet, so you don't have, I mean, Islamic banking doesn't have the space to develop itself in a banking system that is not mature yet. So that was just my view.
When we say that, in Indonesia, for example, Islamic banking is only 5% of, it's basically of the banking sector. So if the banking sector grows, okay, with this, Islamic banking would grow as well, but we don't know whether the share of Islamic banking would increase. For that, we need to know what are the reasons for financial exclusion. We did a very detailed survey in Pakistan recently on behalf of for the central bank. Right? And one aspect we wanted to look into was, what are there some religious reasons for financial exclusion? In Pakistan, about 70% of bankable population is excluded. This means only 30% of bankable population is in banking net. And our results, they were very interesting. We somehow thought that the religious reason would be very significant. However, we found that this was not as significant as one would expect. The primary reason for financial exclusion, which is voluntary, was basically people don't have money. Now, I would go to a bank if I need to put money into the banking sector. So if my income level is so low, probably I don't need banking services in terms of bank accounts. It doesn't mean that, I would not have demand for the services on the other side, i.e. I do not have demand for loan services. Now, these poor people definitely, they would need loans. Right? And this is true. This is why in the countries we are mentioning, Bangladesh, Indonesia, Pakistan, microfinance has emerged as a very, very significant phenomenon. Right? Bangladesh, we know that because of Grameen Bank. Right? In Indonesia, we don't emphasize on the thing, but the tradition of something which should be called microfinance is even older. They have what is known as rural banking. There are about 1,000 rural banks in Indonesia, out of which about 29-30% they are Islamic rural banks. So the tradition of microfinance kind of thing is there. In case of Pakistan, actually, microfinance has become a very developed sector. It's the number one. According to the recent ranking, a very close number 2 in the world in terms of microfinance regulations. The central bank is actually regulating microfinance projects and activities in the country. So I would say that, and yes, and the question is, if more and more people come into banking net, what would be its impact on Islamic banking and finance in its share? In case of Pakistan, we can say that it would be very significant. It's related with conversion of a person from a non-banked person to a banked person. And we found this evidence that when someone goes into the market, and this is the first time customer of a bank, and if in the market there are 7, 6, 5 banks, out of which 2, 3 happen to be Islamic banks, there are 87% chances that this person moving into the market would go for an Islamic bank. So it depends how quickly the conversion from non-bank to bank takes place. Once it happens, the growth of Islamic banking and finance in these countries would be tremendous.
Thank you, Professor.
Hi, thank you for your talk. It was really enlightening. My question is, I'm from Pakistan, and when I was much younger, when I first found out about Islamic banking, that there's such a thing, I asked my father if he had an account in an Islamic bank. And he said, well, no, we don't. And I asked him why not, when that's the right thing to do. He said that, well, Islamic banks are not really, they claim to be very Islamic, as you mentioned, but they're not really that compliant, and also they don't really have branches everywhere. It's very difficult to it's not that convenient, and then it's not really that compliant either. So my question is, there's a lack of enthusiasm in countries like Pakistan, where there's a large Muslim population, about Islamic banking. How can that be changed? And as you mentioned that people don't have money, basically, so that's why they're not really drawn to, in countries, Muslim countries, towards Islamic banking, but those who do aren't really inclined. So how do you counter that? Thank you.
Can I just answer that by asking you, would you have the same view as your father?
No, I wouldn't. If I could open my student bank account in an Islamic bank, I would. But I don't think I can. At least if I would have to pay a fee, as opposed to Barclays or Lloyds, where I don't have to pay a fee for a student account, and then convenience and all of those factors. But if it was compliant and I was assured, I would be willing to maybe pay the fee as well. And then.
So that kind of indicates that there has been a change through the generations. I think what we find with the younger generations, there's more propensity to get into the banking system, and with their own banking system, they're more likely to go for Islamic finances. They're a bit more educated about its significance.
I would add, I don't have an account with Islamic bank. I don't have an Islamic mortgage. And that's on purpose, because I think there's no added value into it. And I think, as a Muslim, if somebody's going to go to the market and offer an Islamic product, I'm going to hold it to high values. Right? So if a new shop's going to open and offer Islamic meats, I'll go and check, I'll make sure it's Islamic. And my view of, unfortunately, the Islamic banking industry is that I wouldn't open an Islamic bank account, because I wouldn't see any difference. The contracts would be different. And they'll have approval from scholars, which I would never countermand or say it's not right. But in the end, it's our choice. And I think in terms of drivers, one of the drivers that people will have will be commercial. So they will say, if I move my account from the bank at A to the Islamic bank B, what's the difference? They'll say to the Islamic bank, what are you paying? And Islamic bank will say, we don't pay interest, but they'll say, come on, but what will you pay me? And Islamic banks will pay something, whether it's profit on transactions or trades, but for commercial reasons, they have to pay something to their customers, and they have to benchmark it to what the banks around them are paying. If NatWest, I don't know what they're paying. If NatWest are paying 3% on current accounts, and if Lloyds is doing the same at Santander, if Islamic Bank down the road is paying 1%, a lot of Muslims won't be interested in moving, and that's a fact. And I think one of the other drivers for Muslims, sometimes, for a number of Muslims, it's enough that it's Islamic. So, my brother, for example, he has an Islamic mortgage because he thinks it's right. It's really what he wants to do. He has an account in Islamic bank because it's really what he wants to do. And I think it's fantastic. And there's a proportion of the Muslim population that would do it because it's Islamic. And I think there's also a proportion like me. I'm not refusing because I'm lazy. I'm refusing because I hold it to a high standard. If someone's going to tell me it's Islamic, I'm going to look at it in detail. And unfortunately, I don't see a difference between what I see from Islamic banks and commercial banks, and that's the reason I don't know.
I have accounts with Islamic banks. I've got quite a few. And I have reasons. I'll share a story. But before that, I think this Sharia non-compliance, or less than satisfactory Sharia compliance of Islamic banks. This is an old story. Sharia compliance of Islamic banks has improved significantly in the last 10 to 15 years. Non-availability of Islamic banking services, this is, especially in the Muslim countries, this has changed. You refer to Pakistan. Now, in all the big cities and small cities as well, there are Islamic branches, or branches of Islamic banks or Islamic branches of conventional banks. So the availability has improved significantly as well. And there are some commercial reasons for people who are religiously motivated to go to an Islamic bank. I'll share this story. I used to have a current account with the Citibank in Islamabad. And my personal banker, whenever I would go, he'd say, why don't you put your money into this investment product or this saving product? And I would say, do you have any Sharia product? And he said, no. So I'll keep my money in the current account. Now, one day I received a call from this chap saying that we are closing our retail banking, consumer banking operations in Pakistan. So come and close your account and move your money somewhere. So I moved my account to Standard Chartered. I went there and asked them, oh, do you have this Sadiq Islamic account? They said yes. So I'd like to put my money in it. And after 6 months, I was so happy. The money I used to have in Citibank would not give me any return. And after 6 months, I checked there was 40,000 rupees more money into my Standard Chartered Islamic account. I'm a happier customer. So I would like to do Islamic banking, and there are so many other people like me. This is the reason that, again, referring to Pakistan, banking sector has grown about 9-10% overall in the country. Islamic banking for last 3 years, consistently it has been 33%, 34%, 35%. So this excitement, you say there is no excitement? Where is this growth coming from if there is no excitement? Right? There is huge excitement when especially it comes to deposits. Right? The central bank became worried. The growth in Islamic deposits, okay, in Pakistan was so high that they, in an indirect way, they started discouraging. Don't open new branches, because if you are getting so much more money into your system, and if you don't have products available on the asset side, then there would be an issue. Okay. And this is not a story only in Pakistan. There is a consistent story in Turkey, okay, of course in the GCC countries, in Malaysia, in Indonesia, and now in some North African countries as well. So I would say that there is this huge, and I can share we don't have time, I can share the reasons why there is so much excitement about Islamic banking and finance. But definitely there is this huge enthusiasm, especially amongst the younger generation. Okay. I've got this U-shaped phenomenon. It's very young, okay, they would have very high demand for Islamic banking. When it comes to your father's age, okay, very small demand. And then when they become too old, all of a sudden they can see their 1 foot in the grave and they become religious. Okay. So this one thing which is this is one U-shape, and over the time, and this is very interesting, that U-shape is actually going up and up. This means what? The fathers, they are becoming they are becoming more religious as well. So this is going up, and I believe by 2025, between 2025 and 2030, this U-shape, because it's basically becoming flat. By 2030, I believe that there will be still, this curve kind of thing, but very slight kind of curve. Right? And that would be the time when Islamic banking and finance would become a significant activity in a number of OIC countries.
Hi. I have actually quite a simplistic question, I think, but I would quite like to know the answer, so I thought I'd give it a go. If I've got my savings in a Western bank and they're paying me an interest of below the inflation rate, then I'm not really getting any excess. So in this scenario, how is my banking Sharia non-compliant?
Okay, so I think that comes down to what is riba from a Islamic perspective. And I think the point you've raised there is a very valid one, because it comes down to what actually is earning interest if the value of the currency which you're earning interest is changing, so that it's actually less than has been put in. And there's a bit of a sort of a theoretical discussion there, because the basis of currency from a Sharia perspective is that it should have intrinsic value, ideally. Okay, so from an Islamic perspective, the real currencies are gold and silver. Okay? So there isn't therefore that concept of inflation or the automatic devaluation of currency. So the scholars have looked at this, and there are opinions as to what amounts to interest. So if you have a return on a deposit which exactly matches inflation, so that you're getting back in real terms exactly what you're putting in, is that interest or not? And the majority, I think, authentic view is yes, that is still interest, because you have to decide firstly, do you treat from a Sharia perspective paper currency as money? And if you go down the route of saying, well, that's not actually currency, then it leads to all sorts of other complicated issues. So I think the majority view is that, okay, currency should be gold and silver, but these days you've got dollars and pounds, you accept that as currency. Any increase on that is riba, and I think that's the safest Sharia view on the run.
Because there are a lot of economics and finance students. And first thing, I would like to define what is prohibited interest is. Interest in Islam is unequal exchange of anything, whether this is money, wheat, or merchandise. Okay. So when interest or riba in Islamic economic system is a nominal concept. It's not a real concept. It's about quantity, amount, not about value. So if anyone is exchanging unequal quantities of money, i.e. you deposited £100 into your account and you're receiving 105, that is unequal exchange of money, which would be considered as prohibited interest. Why Islam takes that view? Why Islam takes this nominal view, not real view? Because it's more objective, and that was a matter of preference. If we say that on this table there are only 2 bottles, these bottles, no one in the world would say that there are 3. If I say that these 2 bottles give me 100 joules of utility, many of you would dispute with me, because the utility of these 2 could be different for different people. So when it came to Islamic theory of value, the preference was on the quantities, amounts, and numbers. So anything, whether this is as a commodity or currency, or something which has any kind of value or utility, you are exchanging it in unequal numbers from an Islamic legal viewpoint, that would be considered as riba or prohibited interest. Inflation, some people say that, oh well, inflation has eroded the value of my money. If I have given £100 to someone, inflation rate is 2.5% during that period. After 1 year, my value of my money has gone down by 2.5%. Hence, that borrower should be penalized. Why? Is inflation caused by that borrower? No. You must penalize someone for what they have done. If the borrower is not party to this increase in inflation, this is unjust, unfair to penalize that person, that individual or institution who happens to borrow. So I think, again, going back to your notion, your explanation of the notion of justice in Islam, this is unjust to bring inflation into loan contracts when the two parties, borrower and lender, they have not contributed to the increase in inflation. Inflation is a macro phenomenon. In this micro transaction, no one should be penalized for that.
Last question. Sorry.
Okay, I was going to ask about Pakistan, and because I understand Pakistan from the periods of their stagflation where they had no real growth and high inflation, the Benazir Bhutto era, but compare that period and also this period where the Pakistani rupee has fallen so much, and if any Western bank was thinking of getting into the Islamic finance scene, they would be being shortchanged. I mean, they wouldn't even get back what they put in. And how do you see back then during the Bhutto era where there was a sort of, search for Islamic finance?
I'll give one portion of the answer from my point of view, from a banker's point of view. So if we look at an international bank looking to do business in Pakistan, for example, they would look at a couple of things like credit risk is a major thing, and the currency risk is the other. But if credit risk was volatile and beyond certain parameters, meaning it's too risky to give anybody money, international banks would have a real problem to operate in a country. Because from a country's point of view, from Pakistan's point of view, if they're going to allow international institutions into Pakistan on the ground to open up branches and do business, one of the fundamental requirements would be, Pakistan would say, the regulators would say to that bank, you've got to use your capital to provide financing to the people in Pakistan, whether it's individuals or institutions. And one of the issues, certainly the banks I've worked at, when we've looked at Pakistan, because it's been volatile and unstable, there's been reluctance to increase the credit exposure in Pakistan, which means it's difficult for international banks to increase their footprint in a country like Pakistan because of the inherent risks on the ground. Now that's slightly different to how banks in Pakistan would look at the situation, because the rupee, in that sense, it's a domestic currency, so they would only be impacted in international cash flows and international transactions. But in terms of how that would impact the growth of Islamic banking, I think it would impact the growth of Islamic banking the same way it would impact the growth of conventional banking in Pakistan, because the risks are the same. Whether Islamic banking and conventional banking, credit risk is credit risk, currency risk is currency risk, political risk is the same as well, political risk. Do you have anything to add?
Yeah, no, from pure banking viewpoint, whatever you said is consistent with the empirical evidence. The likes of Barclays, they went into Pakistan market with a lot of enthusiasm, and they just decided to come out. RBS is another example as well. However, for the pure other financial transactions, countries like Pakistan, they are very, very profitable. And this point is relevant to your reference to inflation. Inflation about 5 years back was about 24% in the country. Inflation in the country was about 24%, about 5 years back. When the government changed in the country last year, it was only 9.5%, so went down. When you look at the business profits, they're 50%, 56%. So 50% profit minus inflation rate, the real profitability is still very high. In terms of the prices of the goods and services, if you are looking for comparable goods and services in a country like Pakistan, Indonesia, Malaysia, wherever, they are more or less the same price now. So this means that the businesses over there, they are more profitable as compared to Sainsbury's and Tesco's and so on. Here the profit margin has actually gone down significantly because of competition. You go to similar kind of stores in these emerging economies, the profits are huge. profit margins. This is why a lot of businesses are entering these markets. But when it comes to banks, which are involved in money lending and more pure monetary transactions, yes, these countries may not be an attractive destination, as Safdar suggested.
Thank you. That's it for this kind of the panel session of it, but there will be networking, and we have got Subway. Not that that would be a sway for any of you, I'm sure. So, you know, do some talking, do some eating, and then you can go home. Thank you very much for coming. Thank you to our speakers. It's been very informative having you here, and you've actually shed a light on something that we didn't know about. Thanks.